structure in supply and demand, and I basically want to go over how I won these two trades here and show you guys some of the steps that I took to get these trades. So the first step is to understand the pair you're trading and also understand market structure. So I was trading New Zealand CAD, and I know specifically for New Zealand, you can use the 5-minute and the 15-minute charts, because the 1 hour on the New Zealand New Zealand dollar, New Zealand CAD, or any New Zealand pair tends to be really slow. But I noticed when I start using like the 15-minute, like here, and then go down to the 5-minute, I find plenty of trades here. So that's another tip when you're trading any. Here's what I want you guys to do. When you're trading on your Forex pairs, here are the time frames to look for structure. You can look for the structure on the 5-minute, only on pairs that have the JPY pairs, Swiss franc pairs, and New Zealand pairs, and Australia sometimes, but mainly Japan, mainly Japan, Swiss franc, and New Zealand. You can use the 5-minute and the 15-minute time frame because those pairs move slower. So this pair is New Zealand CAD, like I've been saying, and so I use the 15-minute and the 5-minute for my structure, because the 1 hour, it's basically the same. It moves slow, so that's why I use the 15-minute, 5-minute. And then once you do that, you're gonna mark your highs and lows from left to right. So what I did here, I'm gonna make a line so you guys can understand everything I did. So the first thing I did, I started back here, before that red line. And okay, so before this red line, I've noticed, okay, so previously we have down structure, we have lower highs, lower lows, right? And for me to confirm that I had 2 lower lows and 2 lower highs. And so when you're selling, you want to, before you enter a trade, you want to identify the current price range that you're in after you mark your market structure. So the current market structure that we're in is this current high would be, in this case, before this red line, and this current low. Okay? And within this current high and this current low, we have to wait for price to come to the highest point between this price range. And what I mean between is, let's just draw a line in between our current high and low, right? So let's just draw it like right here. Okay? This would be considered your equilibrium in price, and this basically divides price by discount and premium. And what that means is, so if we're selling to make money in Forex, we want to be selling at premium prices rather than discount. And premium price is at the top of the range, and discount is at the bottom of the range. So when you're buying, you want to buy low, so that would be buying at the discount of the range. And when you're selling, you want to sell high, so that would be the premium part of the range, because we sold and we entered. And yes, this still counts as premium in the range because this is above the black line. So this is above the line, and this is the premium part of the range, so where prices are higher. Premium side of the range is where prices are higher if you look to the right here as the pips get higher, and discount is when the price is low. Okay, so we sell at the premium, we buy at discount. And so the premium price was my zone here. And the reason I had I had a time frame, there it is. On the 1 hour, I had an imbalance gap, and if you don't know where that is, watch another video on my YouTube channel. I have it. I had an imbalance gap here, and I guess I could have took the trade here, but I missed this gap. I missed the gap here, but because I noticed this wick, it allowed me to get in the market early. So that basically means, because of this wick, it confirmed that smart money was tapping off that zone, because smart money will literally tap on these imbalance gaps, fair value gaps, and tap before going down. It's always a tap and go. They don't really hang around and you see a drawdown. So for smart money, guys, it tapped, and I noticed that. So what I did after, I went on the 15-minute time frame, and then, hey, I noticed this. Let me go on the 5-minute time frame. Check this out. I noticed another imbalance gap right here, and you see where I entered there on that yeah. So I really actually entered up here, but I had this here for the stop loss. So yeah, guys, that's basically how I did it. In both of these entries, all these entries and gaps and fair value, these are all on the top of the range. So it's really that simple. And what you can do too for extra confluence, you could, if you noticed, the volume is in harmony with with structure. And if we take the volume divergence and draw a line here, it's descending just like our market structure. So we're in harmony with volume, and there's mainly red volume, which means they're still not done selling off. And so that's why I was able to win both of these trades. And down here, after the first trade, it left another imbalance gap here. And again, if you don't know what imbalance gaps are, they're a little bit different from fair value gaps, but imbalance gaps, I have a video on my YouTube channel. And so that was the imbalance gap that I entered off, guys. And boom, right there. And you see, and you notice how off of all these zones, number one, number two, off of all these zones, number two and number three, there are wicks. There are these big, giant, or medium-sized wicks, and that's another confirmation that your entry is valid. Is when you see a wick bouncing off of your gap or your entry or your order block. And so yeah, guys, this is basically just a quick video to explain some simple concepts that I use. I don't want to make it too in-depth because you won't learn anything if I make it too complicated. But this is basically what I do. And for take profit, I usually take profit double bottoms and double lows. But here, I didn't see a perfect one, so I just targeted this institutional bank level. And then down here, I targeted this low. And so yeah, guys, that's pretty much it. If you want my help or you want to connect with me on Instagram, it's in the description or in the comments. I hope you guys found some value off of this video. And yeah, that's pretty much it. Market structure, number one, that's the first step to finding trades. And step number two is identify imbalance gaps, supply and demand zones like you see here, or your order blocks. And I have videos covering what those are. Basically, guys, structure and then look for your point that you're interested in. Look for your area of interest. So if you're buying, look for your entry zone to be in a discount level at the bottom of the range. And if you're selling, look for your entry level to be like I had here at the top of the range. And usually structure is created by smart money. Oh, still going down. Structure is created by smart money. So the news moves the market. So that's why I also in other videos say to look for the news, because I start my day looking at all the news, because retailers aren't powerful enough to actually make market structure. Market structure is made by the operators of the market, which in the Forex market, the operators of the market are institutions and banks. Those are the ones that control the market the most. So we follow the institutions and banks by looking at the news on Forex Factory and other sites that you may use, and then we go back here and we align market structure with institutional news. So if there's news coming out, let's say at like 10:30, and it's currently for you like 7. If you don't find a setup, that's fine. You can wait until after the news, because after the news, the market tends to make a correction and make a retracement. Then you can find another entry. And if you happen to find an entry before the news, that's good, because what will likely happen is, if you're trading smart money, the news, whatever the result is, it will actually push your trade into profit if you're on the right side of the market. But yeah, guys, this was just a quick video. I hope you guys found value. Remember, number one, market structure, and step number two is look for your identify your areas of interest that you're interested in trading in. And those areas are supply and demand zones. Those areas could be order blocks. Those areas could be fair value gaps, imbalance gaps. But for me, the way I trade Wyckoff, so I trade imbalance gaps and order blocks and schematics. But if you guys are interested in that, connect with me. I do I do have a Discord. I don't really have a course or anything. I just have videos on my strategy. It's only $77 one time. I don't charge like $200, $1,000. It's real cheap. And yeah, guys, I hope you guys found some value off this video, and this is basically what I did. Peace.